Kalani, there's new research showing that our households are poorer by a collective 1.2 trillion rand in the second quarter. Wow.
Quite interesting indeed. The wealth of South African households decreased by an estimated 1.23 trillion rands in the second quarter of 2022 to 15.75 trillion rands, and that's according to the latest Momentum-Unisa Household Wealth Index. According to Johann van Tonder, an economist for financial wellness at Momentum, should this lower level of household wealth persist, it will contribute to slower growth in household consumption expenditure, which in turn should adversely affect economic growth and employment. I caught up with Johann earlier on and asked him to explain exactly what they are measuring.
Wealth is actually assets, your total assets minus your outstanding debts. And your assets then consist of the residential buildings that you might have, durable goods that you might have, other non-financial assets that you might have. Plus then the biggest portion of it is your financial assets. And your financial asset then consists of deposit you might have in a bank, your pension fund and long-term insurance, and then your total investments you might have in unit trusts or shares or bonds or whatsoever. So then you add all those assets together, and then you subtract all your outstanding debt. And that might be a mortgage, a personal loan, and a credit card or outstanding municipal accounts, etc. So once you do that calculation, that assets minus the debt, you get to your wealth. And that's actually what we're measuring, is what happened to households' wealth. And very important, it's actually the income that we earn. We use that income to build wealth.
So this second quarter says that South African households are 1.2 trillion rand poorer in 2022. This, if it persists, the index says will contribute to slower growth in household consumption as well. Tell us about what this huge number actually means in your findings.
The decrease was from 17 trillion to 15.8 trillion rand. It's a huge number. And the decrease occurred mainly as a result of the decline in the value of households' financial assets. In other words, the value of pension funds, the value of investments in unit trusts, and so on. And that was mainly caused by central banks all over the world increasing their interest rates much faster than they used to in the past, and that led to fears of a world economic recession. And because of that, risk aversion occurred, and that led to a sell-off of shares on the share markets and so forth. And because most of the pension funds and investments are invested in on the stock exchange, that contributed to the sharp decline in the value of financial assets in pension funds and investments. So that's a paper loss. It's not an actual loss at this stage. It's only if you go and sell that you will realize the loss and that you will be poorer. But that being said, coming back to your question, there is a very, very strong relationship between wealth and economic growth. So all the calculations that we've done with UNISA show that a 1% change in wealth can on average be associated with a 0.8% change in household consumption expenditure. So we know consumption expenditure actually is the biggest contributor to gross domestic product to measure economic growth. So it would mean that such a decline or strong decline in a quarter can have a big impact on economic growth in the second quarter. So this suggests that economic growth in the second quarter would not be very good.
Talk to us about the growth in household debt. As you've seen in the index, there was also an increase in household liabilities by around 39 billion rands in that particular quarter.
Yes, it's actually driven by mortgages, interestingly, with interest rates going higher. So mortgages made up about 50% of the 39 billion increase. So in other words, 18 to 19 billion more in mortgages. And the other 19 billion was all the other debts, like your personal loans and credit cards, municipal debt, etc. So, but what we did see is, among others, the higher interest rate caused the pace at which households are making debt to slow from around 2.7% growth to 1.5% growth in the outstanding debt. So it could have been higher had it not been for the higher interest rates, but that's definitely slowed the pace at which households are incurring more debt. Certainly that was the case in the second quarter.
On that note, let's take a closer look at how the markets closed and performed today.